All right, so welcome in. Hopefully everybody's doing well. I wanted to do and record a trade recap of today because there's honestly a lot of really good knowledge that you guys can get out of the trade that we took today on live. So first thing I want to start out on is the bigger time frame. So let's kind of go back before I even jump into what the trade actually was. I'm actually just going to clear up my entire chart and kind of go through my thought process for the entire day and the actual trade that I ended up taking. So first of all, let's go here to the open. We'll go to 9 o'clock, so 30 minutes before the open. So first of all, looking at NQ, we want to zoom out and we want to say, okay, what's going on in the bigger time frame? Well, the bigger time frame, we know we've been selling off the last previous week. When we look at the 4 hour, we had this SMT up here, SMT here, and we just immediately started to flush. On Thursday of last week, we came back, took this recent high, tapped this daily fair value gap. If we zoom out to the daily, you can see we tapped this daily and then look to expand. And then now we are in a 4 hour fair value gap here. And then when we look at ES as well, ES, we knew going into today that we were actually in a daily fair value gap as well and this daily inverse fair value gap. So kind of going into the day, my bigger time frame bias is I'll kind of more bullish. But I still, for me to be really bullish, right? For me to be bullish and expect us to go run the generated buy side, right? This is how I want to think. I know on the lower time frame, we have high here, right? This is generated buy side liquidity. What needs to happen first for me to think and know and have confidence that this is the drawn liquidity? And why does that matter, first of all, too? Because the best trades that we are going to take is by aligning the external model with the internal model. If I don't know what the external draw is, then it's going to be very hard for me to get a high quality setup, right? At least for the bigger time frame. Now, my bigger time frame could also be like a 15-minute, but I'd have to know what the bias is. So going into today, because of the bullish bias not giving me what I needed, which was clean change in the state of delivery on the lower time frame, displacement of the upside, I was watching this 1 hour fair value gap because on a 4 hour, we had a bearish 4 hour fair value gap. Order flow here has been extremely bearish. I zoom into the 1 hour, we have a 1 hour fair value gap here. And if I zoom into the 15-minute, we also have a 15-minute fair value gap here. So what I was kind of noticing pre-market is, well, number one, we're going into a higher time frame point of interest, right? What are we looking for our model? We're looking for a higher time frame point of interest. We're coming back to equilibrium of this previous price range, right? We're pulling back into equilibrium as well as this imbalance. And we're noticing in the morning we're generating liquidity, right? New York AM low puts in here, recent low to the left of us. And we can also see on the 4 hour, we actually put in an imbalance. So one of the biggest things we want to focus on in every trade that you take, every single trade that you take should have one of these 4 reasons in why you're taking it. Number one, markets hunt liquidity, markets generate liquidity, markets rebalance to inefficiencies, and markets rebalance to equilibrium. Let me make sure that. Hunt liquidity, generate liquidity, rebalance to inefficiencies, rebalance to equilibrium. Every single trade that you take should have one of those reasons because that's why the market is actually moving. That is why the algorithm hunts price. So going into the morning, one thing that I wanted to see is I'm noticing, okay, we're generating liquidity, and I would want to see 930 be morning manipulation, meaning I'd want to see us manipulate to the upside and then go run the generated sell side that we created in the morning. So what am I watching for? Well, what are the time? How can I start to relate time and price to this? Well, I want to be watching 945, 950, which is when the first macro opens up, and I want to be watching 10 o'clock. 10 o'clock is when the 4 hour candle opens. So if I mark this in right here, which is an indicator, and this shows me what the 4 hour candle looks like. And this 4 hour candle opens at 10 o'clock, meaning at 10 o'clock on the bigger time frame, if I zoom out to the 4 hour, is when the new candle opens. Why is that important? Because if we look over to the left here, let me draw this out. Why is this important? And I'm giving you a lot here, but I want you to follow along. This is a 4 hour candle. How does this work? We have open, low, high, close, right? Open, high, low, close, right? This is the open, this is the high, the wick is the low, and then this is the close. Inside of this candle, you have the open, high, low, close, right? And this is the movement of this candle, right? And if we were to do something like this, and then it closes, it would look something like this. Right? And then market, and then candle closes here. So that's important because we want to understand how a candle actually forms. So what am I looking for and why is that important? Well, at 10 o'clock, what I would want to see is I would want to see manipulation of the upside, and I'd look to see an expansion because we're in a point of interest, right? I want to see manipulation at the highs and then look to see us come back down, right, in our point of interest. So going into the morning, I was bullish on the internal time frame, meaning I'm expecting this high to get ran, but I'm focusing on this, looking to see manipulation in this area so I can go run lower. So market opens. We'll go to 9:30 open, which was right here. Possible long opportunity. Came down, tapped this imbalance. If you actually zoom in, again, price is completely fractal. If you zoom into the 5-second, you can see price rebalanced, took this low to the left of us. We actually put in an SMT right here. And then we had a change in the state of delivery, displaced through this, and then immediately ran to buy side, and then continued higher. So there's a nice little long opportunity there, possibly once this closed above or in this fair value gap here or in this fair value gap. Zooming back out. So now I'm sitting here, I'm like, okay, I'm waiting for more structure. Right now there's literally nothing. I just need to wait for manipulation. So I'm waiting. I'm going to mark in 10 o'clock, and I want you to pay attention here. 10 o'clock. 10 o'clock opens. What are we looking for? I'm looking for manipulation and a change in the state of delivery to go lower. Okay, we have manipulation at the high. What am I looking for? Change in the state. When I zoom out to the 5-minute, this down close candle, series of up close candles, this bottom of this candle is a change in the state of delivery, meaning we have now closed below this. At this point in time, I am extremely bearish. I'm expecting us to flush all the way at least down to New York AM, but most likely, where? Standard deviation projection, which means if we look at the manipulation leg, which means the high to the low of the last leg before our change in the state of delivery, and we draw in our standard deviation, I expect sell side to get taken, and I expect the market to reach into standard deviation. And at standard deviation, what do I expect from here? To go back to equilibrium at least of the range. So I expect price to come back to standard deviation, respect this, and then rebalance. Again, what are the 4 reasons why markets move? Generate liquidity, hunt liquidity, rebalance to inefficiencies, rebalance to equilibrium. What are we doing here? We're manipulating, we're generating liquidity in the morning to then go hunt that liquidity, to then go rebalance to the inefficiency on the 4-hour, to then go meet the standard deviation, to then go rebalance back to equilibrium of the range, right? So I'm just going to pre-draw this, right? We would want to see something like this. We meet standard deviation, sell off, standard deviation gets met, respect it, and then back to equilibrium of the range, right? That's what we expect. So that's my bias right now. What am I looking for to take a trade? I'm looking for this fair value gap to get tapped into. Market just misses this. So I missed my initial entry, and so I was waiting. I'm waiting, and I actually, honestly, today didn't really get the good entry of at least I wanted. And it's not that my entry was bad, but I didn't get the best entry. So there's really 2 entries here. This right here, because if you zoom in on the 15-second, there's actually an imbalance we do tap into at that point, and we already had our change in the state of delivery. We had a big displacement move below this candle, so we expect this entire move to get ran through. And once we get down here, and once I look at ES, and I can notice at this exact same point in time, if we zoom in, this fair value gap holding, I know that this 5-minute or this 1-minute fair value gap becomes a breakaway gap, right? So all of the people that were trading today and you were looking to get short right here and then didn't get tapped in, you failed to recognize that this becomes a breakaway gap. Why does this become a breakaway gap? In my opinion, looking at where ES is, this imbalance gets respected in relationship to the sell model. If you were looking at ES, you don't expect ES to break through this and then go here. You expect order flow to hold bearish. And we did. So if you zoom in, what actually happens here? we put in a lower time frame SMT. And I remember on our live session today, I said we should dump here. And this is where I was going to take an entry, but I hesitated a little bit. I said we could expect to see big candles come in here, and then we ended up selling off. Now I'm like, okay, I still think we're going lower. Is there an area and I can look to take an entry? And there was this 1 minute fair value gap. Now this is a more advanced entry. Most of the time, I say to not take this kind of entry because your risk is skewed. But this is a very specific case, and all of the stuff that we're talking about right now is like me trying to share market experience of why these things are happening. Like, why does this breakaway gap not work? Because ES tapped that imbalance and it was a sale model, and we already had a change in the state of delivery. You're not going to get tapped in. This SMT holds. We get a big down candle. Why do I take my entry in this 1 minute fair value gap? Because there's so much risk more to the upside, right? So I'm waiting. I enter short in the 1 minute fair value gap, and I zoom into the 5 second, and I'm looking for the fractal model. And I put my stop at this high, and I'm looking for a continuation. So I zoom into the 5 second. We're in the 1 minute fair value gap. To the left of us, there's this order block. Recent high gets taken. Fair value gap. Again, this is literally the exact same model. What's happening here? Literally the exact same model on every single time frame. If I zoom in even more to the 1 second, I guarantee you're going to be able to see the exact same fucking thing. What is happening here? What is happening here? Fair value gap. Manipulation. What is this? Generated liquidity. All of this generated sell-side liquidity. What do we plan on doing? We plan on running it all at once because it's in favor of the drawn liquidity. What happens here? Displacement to the downside, change in the state of delivery, pull back to the inefficiency. This is its own model in its own. Every single thing that you look at in the market is its own fucking model. And when you can learn to understand how to frame entries when you have a bias, is how you're going to take advantage of it. So you have market maker buy and sell model. I enter in short once this high gets taken, expecting this to be manipulation. If I didn't get that entry, I could have waited again for the pullback to the inefficiency, tight stop here, and then we continued lower. Now, next thing. So I enter my short. I'm gonna clean this up. Let's talk about my MPTs. Now, I didn't initially take off my contract at this low because I knew we were going to see more displacement. Why did I knew we were going to see more displacement? Because on the 15 minute, or on the 1 hour, sorry, this was our change in the state of delivery. So if I look at there's two different models, there's a lot of shit going on here I want you to pay attention to. Why, when I look at this, do I decide to wait to take my contracts off? Well, the easy solution or the easy answer would be like, okay, well, there's standard deviation, Justin. Like you expect to go here. Yes, that's true. But I definitely always think you should be scaling something here, right? It's definitely not bad to scale something here. But I expected at least a fat candle to come in here, and I could take advantage of more points. And one of the reasons for that is because on the bigger time frame, when we talk about aligning the bigger time frame bias with the lower time frame bias, let me take this line off so it's easier to see. This, if we zoom out, this is now my change in the state of delivery on the higher time frame. If this candle closes below. And once we get this displacement, I now expect to see the market move lower. So, at that time, I was expecting to see a follow through. And so I let my contracts go. And I scaled most of my contracts here. I scaled half of them, actually half of them right here. And then I actually ended up stopping out, or not stopping out, but I took it off in profit. I'll show you the executions when I get out of this. Let me go to lower time frame. We sell off, we sell off, sell off. We're moving lower, moving lower. Once this imbalance right here on the 1 minute gets broken through, I'm still expecting lower prices. But I'm like, it's It's best to just take it off here. And I didn't trust myself. Right here, I was like, fair value gap's getting broken through. I took it off. Took my contract off in profit. Boom, done, closed. And then this candle came in and I said, what the fuck am I doing? We're going lower. And so I re-entered with a tight stop at this high in that fair value gap, looking to see an expansion towards standard deviation. And we ended up getting an expansion towards standard deviation. Now, what do we expect? What did we say earlier? Standard deviation. Is there a reason for me to hold my position right now? No. Why should I not be holding my position right now? Because standard deviation has been met. We've rebalanced to the 4-hour fair value gap. Remember when we talked about and look at the 4-hour? Right? We are now in a 4-hour fair value gap. We are in a standard deviation projection. Do we expect price to go lower? No. Look what fucking happens afterwards. Standard deviation projection, perfectly met, perfectly respected, like we said. And what do we go do? We at least go back to equilibrium and we go hunt buy side. And now market's just doing nothing. It's a no news Monday. So I kind of just rambled a little bit right there, but hopefully you were able to get a lot out of that. The biggest thing I want you to really get out of this video is a couple things. Number one, what is the bigger time frame bias? What do you expect? If you're going to a point of interest, what's your point of interest? Is it in the opposite direction of the draw on liquidity, right? Notice, I want the draw on liquidity if order flow, if I'm looking at this and I'm like, holy shit, bearish, we're making new lows, high, new low, new low, new low, right? High, I would want to see us new low. Easy. So where's an area in which I can expect to reject? Well, I look at the recent price leg, equilibrium of that previous price leg. There's an imbalance inside of an imbalance inside of an imbalance here. Okay, well now let me align it with time. We're in that area now. We're in an area in which I expect to reject. What am I looking for? A smart money reversal. I'm looking for SMTs and I'm looking for a change in the state of delivery. Once I can a change in the state of delivery, I'm looking for an entry. I'm recognizing what the model looks like. What is the model? Is it clear to understand? Can I easily see buy side and sell side of the curve? And if I can easily see buy side and sell side of the curve, I look for buy side and sell side of the curve inside of buy side and sell side of the curve. Because I'm overlapping the easy to understand model where I think, hey, we're going lower. And I look for the market maker and sell model inside of that, which was right here, which I could catch. If I could, I should have entered up here, but I was still able to catch this move and still able to capitalize on it. It's like, you don't need to catch this entire move. Stop trying to catch home runs. You do not need to catch this entire move. Catch 5 to 10 to 30 points. This move right here, literally just a sell side, is around 30 points. This move to standard deviation, 87. You don't need to catch the whole move. You could become literally filthy fucking rich off of 15, 20 points. Focus on consistency, not fucking making money. Focus on what are you confident with? What is the market going to give you? Stop focusing on what the market is saying it's going to do or whatever. What are you confident with? What is the low-hanging fruit that you can take advantage of? And that's it. And then once you get that low-hanging fruit, you step away and you call it a day. So hopefully you guys have enjoyed this video. If you did, make sure to like, subscribe. Wanted to share this with you guys. Small accounts going well. We're almost back to new highs. Had a little bit of a bad day. When was that? Thursday? Friday? Well, let's see what we're sitting at. We're up 487 today. It's at 84. If I'm being completely honest, I'm going to probably start trading my main account on the side starting this week because I'm kind of getting tired out of these low numbers. I'm trying to make some fucking bread, and I want to share that with you guys as well. So I'll probably be trading my main account starting either tomorrow or Wednesday, and just do it on the side while I trade on the small account. So hopefully you guys enjoyed this video. Again, like, subscribe, do all that good stuff. We're about to hit 100K. In fact, we might hit 100K by the time you're watching this. So if that is the case, it is actually mind-blowing that I would that's even possible. I would have never thought I would have hit. Actually, that's not true. I knew I was going to hit 100K because I was confident, but it's actually cool to see it happen. So I love continuing to give you guys knowledge. Thank you for all the support. Thank you for all the kind words that you guys say under all of the videos and the psychology videos and the trading videos. I appreciate every single one of you, and more content, more education to come. And we're doing big things in the plan, like really big things in the behind the scenes that I'm excited to share with you guys. So I'll see you guys